Alrighty, what is going on, everybody? Good evening. Welcome to another CYPRX video breakdown. In today's video, we're going to be going over our gold analysis play-by-play in the CYPRX private premium chat, showing you guys how literally step-by-step we have been giving gold callouts week after week ever since we rejected the 1810 psychological level. We went over that in a previous video breakdown. So far, everybody should be caught up to speed if you've been tracking what's going on in the private chat. I'm going to show you all some recent callouts that we just had this week. As always, attempting to be transparent with you guys. I mentioned this potential analysis to you all where I was looking for safe buys above the 1934 psychological level, given that we see an increase in demand and safe haven for gold. Okay, so that's what we're going to be covering today. This is going to be a very in-depth technical and fundamental breakdown. So make sure that you're taking notes. Make sure that you're understanding what causes inflows and outflows of this market. Again, this is all data and information that you can collect. If you don't have access to, high-end fundamental resources, at the end of the day, Forex Factory and fxstreet.com provide fundamentals once those data points and releases come out. So take it upon yourself to go back and back test how previous data releases affected price either positively or negatively, so that way moving forward in the future you can have an understanding of what causes inflows and outflows to assets like gold, especially if you're going to be an investor or a day trader in this asset class. Okay, it's extremely crucial for you. Remember, it's not just about technical analysis, not just about psychological approach. It's also about combining fundamentals with what you're seeing on the charts to give yourself an edge in the market. Okay. So overall, this week, yesterday, I gave you guys an updated analysis on gold, okay? So we're going to start there. We're going to talk about what it is that we were looking for in the market, and then we're going to go over the analysis, and then we're going to talk about the ongoing fundamentals that impacted price today, at least from my perspective, okay? I'm going to show you all how literally step by step I broke this down for you guys piece by piece. The majority of communities out there are leading their traders in the wrong direction. They're not educating people properly. They're giving them unrealistic price predictions. And I've been showing you guys week after week how it is that I take this approach in the market to give myself an edge and to create a sense of accuracy on a consistent basis, right? We're not here in the market for short, quick, lottery fix mindset. We're here for sustainability, long-term, longevity, a consistent appreciation in our portfolio over the long term. We're not sitting here saying that our accuracy is 100%, but what we are saying is that it is very easily attainable to acquire a 60 to 85% win rate in this market, okay? So that you see a long-term growth in your overall either FX portfolio, crypto portfolio, commodity portfolio, whatever it is that your basket of goods is trading, okay? If that makes sense, all right? So yesterday at 5:08 p.m., I mentioned to you guys geopolitical tension. These are the things that I was paying attention to on gold. Geopolitical tensions in Israel. One of the prominent drivers of gold's recent demand and price surge is the geopolitical tension in Israel. Geopolitical factors such as conflicts and uncertainties have historically led to increased demand for gold as safe haven asset. This is because investors turn to gold as a store of value in times of crisis or uncertainty. As a potential gold buyer, it's wise to closely monitor these geopolitical developments as they can have significant impacts on gold prices. We saw last week that over the weekend, we saw an uptick in geopolitical escalation and tension where gold jumped from roughly about 1820 to 1850. And then from that price point, we called out buys up into 1880. And then gold price continued higher based off of its safe haven status and demand for its gold status as a safe haven, with this ongoing geopolitical escalation, okay? I mentioned to you guys that gold was also at previous FOMC highs. So we have the Federal Open Market Committee, or FOMC, plays a pivotal role in shaping the U.S. monetary policy. Previous FOMC highs, which I'll show you guys via the gold price charts here in just 1 second, could act as a resistant level for gold prices, where investors often pay close attention to FOMC meetings and statements as they influence the direction of interest rates and consequently the price of gold. As a cautious buyer, it makes sense to be aware of these levels and their potential impact on gold price movements. Right now, the price of gold is operating in the delta zones, which again, I'll go over in just 1 second, from the September 20th Wednesday FOMC meeting, roughly around the 1920 psychological level. So I literally try to break this down for you guys step by step, okay? Now, another thing that we are paying attention to, the Federal Reserve sentiment. The Federal Reserve stance on monetary policy is a critical factor in affecting the price of gold. If the Fed takes a more dovish tone, so this is where now I want you all watching to start to pay attention to key vocabulary, because I literally dropped so many gems in my analysis. I said, if the Fed takes a more dovish tone, it means they are inclined to keep interest rates low, which tends to be favorable for gold. And I'm going to show you all how in the fundamentals that came out today, there's a more dovish tone from some of the Fed speakers that took place today, which caused a decline in the price of the US dollar, which causes an increased demand temporarily for gold. Dovish policies can provide support for gold's price by making alternative investments less attractive. Monitoring the Fed's communications is crucial for understanding the near-term direction of gold. This week, we have multiple Fed speakers, but our main focus will be Jerome Powell on Thursday. That's yet to come into fruition. That's in 2 more days. Okay. However, we did see some dovish speakers, a dovish tone from the Federal Reserve come into play today. Here's one of those fundamental factors. You can see Tuesday, October 7th, dollar gives up early gains in dovish Fed comments. So again, I let you guys know ahead of the curve to be paying attention to this, right? Key vocabulary, okay? So I let you guys know buying opportunities. This is all, again, ahead of the curve yesterday at 5 p.m. We're going to be paying attention to the safe haven continuation buys. So I said, I am also considering the possibility of a safe haven continuation buy above 1934 psychological level, with the aim of riding the bullish trend towards 1942, which as of today has been met, to 1950. I am actively monitoring this ongoing tension in Israel. I said to you guys, gold is a complex, multifaceted asset with various drivers and influences. Geopolitical tensions, central bank policies, inflation data, technical levels all play a role in shaping its price movements. As a cautious buyer, it is essential to stay informed to adapt to your strategy to changing market conditions. And I sent you guys a screenshot, right? Safe buys above 1934. Okay. So now you guys can see that move has come into fruition. I'm going to go over this in detail, the technical plays, but just so you guys can see, we actually tapped into the 1942. I closed this position at 1940, entered in at the 1934 with buy stops, and my stop loss is roughly around the 1929. So we got a nice 1 to 1.5 risk to reward ratio. Okay. So again, remember, we're not here at CYPRX trying to get 1 to 11s. We're not trying to get freaking 1 to 20s. We're just trying to be consistent with market fundamentals and technical analysis, along with controlling your psychology. So I'm going to show you guys, remember, controlling your psychology. Look at this. This is how patient you have to be. So all this analysis got sent. Today is the 17th, but it's 7:46 p.m. So almost 24 hours in advance. So think about the psychological factor of installing patience into your trading regime and not jumping the gun and chasing price action, right? I even said to you guys here, I let you guys know today at 5:53 a.m. that gold is at the top of the delta. Scenario trade idea to potentially play out, pay attention. Okay. So again, letting you guys know step by step. So now let's go over the fundamental factors that caused potentially this gold demand. Again, we can't sit here and solidify this, but these are the most likely potential factors, the potential factors that caused this recent surge in gold up into 1942. All right. So first, I'm just going to show you guys all of the fundamentals so you can see that you guys can go see them yourself. And then I'm going to go over what it is that I typed to you, breaking them all down. So first, we see this from FX Street. Gold price gains traction above 1920 as Chinese GDP reside. Gold price gains momentum near 1925 amid a softer US dollar. We had also the escalating geopolitical tensions in the Middle East, potentially boosting safe haven flow. We also had investors monitoring the Chinese growth numbers in industrial production along with retail sales. Okay. Then we have over here, a strike on Gaza hospital killing more than 500 Hamas and Israel trade to blame. Okay, so we have ongoing geopolitical tensions. Again, these are all things that I mentioned to you all to be paying attention to in the analysis ahead of the curve, right? Then we also had an announcement today. U.S. prepares troops for potential deployment to support Israel. Now, this internally came out 9 hours ago, and then we had an update from the White House saying that there are no plans or intention to put U.S. boots on the ground in combat in Israel. However, this is still stirring up the pot via the ongoing escalation and tension over in Israel. And then we also had this announcement today, Biden considering $100 billion of funding request that includes Israel, Ukraine, and aid sources. right? This came out from Reuters. So these are all things that I told you guys to be paying attention to. Ongoing geopolitical escalation, which can cause the demand for some gold, right? Then along with the strong economic data from China, which weighs on the US dollar, right? So hopefully you guys are taking notes. We'll start with that. We had strong economic data from China, which causes more of a demand for the Chinese yuan, less of a demand for the dollar. When there's less of a demand for dollar, there tends to be more of a demand for gold, right? Depreciating dollar. Inversely, or divergence between gold and the dollar, we usually tend to see a appreciating or an incline in the price of gold. Then we also had geopolitical escalation that tends to cause a safe haven demand for gold. Then we also had a more dovish tone from one of the speakers today from the Federal Reserve. Okay, so all of these factors could have potentially increased the value of gold today into 1942, which is what we were projecting overall for buy continuations. So now let me break down for you all, taking all of these notes, right? Combining them together and giving you all an overall macro perspective of what caused demand for gold. So first, Chinese economic data and the yuan. The release of positive economic data from China, such as the better than expected GDP growth, increased industrial production, and strong import and export figures can strengthen the Chinese yuan. This occurs because a robust economy typically attracts foreign investment, leading to an increased demand for the yuan. As investors and businesses seek to participate in the Chinese economic growth, they will need more Chinese yuan for transactions and investments. This increased demand for the yuan can cause its value to appreciate against other currencies, including the US dollar, right? Therefore, it has a negative impact on the US dollar. When the Chinese yuan strengthens, it often results in a weaker US dollar. This is due to the inverse relationship between the currency pairs. As the yuan becomes more valuable, the US dollar becomes relatively less valuable. A weaker dollar means that it takes more dollars to purchase the same amount of other currencies, including the yuan. This can impact various aspects of the US economy, including trade balances and inflation. It therefore can have a positive impact on gold. A weaker US dollar can have a positive impact on the price of gold, whereas gold is often seen as a hedge against a depreciating currency. When the dollar weakens, investors may turn to gold as a safe haven to preserve their wealth. Gold is priced in US dollars, so a weaker dollar makes gold more affordable for international buyers, increasing global demand for gold. This increased demand can drive up the price of gold. Along with all of the Chinese economic data, the depreciation temporarily of the US dollar or the pullback, along with the geopolitical tensions and gold demand, we will receive geopolitical tensions such as the situation in Gaza and the US military's readiness in the Middle East can drive demand for gold, could have potentially caused the price surge that we just saw during Asia's session. Okay? So showing you guys that it's not just about technical analysis, not just about sitting there for hours looking at the charts. It's not just about hitting buy or sell. It's about piecing everything together that you can attempt to beat these trading algorithms, to beat these central banks that are moving price hundreds of pips on a day-to-day basis, okay? So that includes having a sound technical analysis approach, understanding the CYPRX strategy for what it is, right? Situating yourself on the right side of order flow. Then along with that, so a sound technical analysis approach, logical perspective in the market, not expecting unrealistic risk to reward ratios, right? So for example, the 1 to 1.5 that we just called on gold and being okay with that. Then having a sound psychological approach. You're not sitting there draining yourself out in the market. You're not sitting there chasing price action. You're not sitting there guessing where price is going to go. You have a pre-planned analysis in the market that you do the day or 2 days in advance, and you wait for the market to come to you, right? Hopefully by now you guys have seen us here at CYPRX do that, so that way you guys can see that we do not chase price action here in the market. We let price action come to us via our pre-planned analysis, and then we react, okay? Such a better approach and gives you such a better feeling. When you make an analysis in the market, you don't touch the market. You set yourself alerts and alarms, and when those alerts and alarms get hit, for example, today, you guys can see in the chat, I even said to you guys, alarms are going off, right? Trade idea potentially playing out, okay? So letting the market come to you, and then reacting to what price action is telling you. So now let's get into that. Okay. Can you guys now see my trading view charts?
Yes.
Okay, sweet. So we're just going to do this analysis. I don't want to bore you guys to death. We already know what has happened on the higher time frame. I've been going over that. The only thing that I do want to show you is when I let you guys know that price